presentation that we've prepared is a little bit more than that. One of the key areas of focus that the Department of Finance has talked about is to bring private lending in. However, one report that has come out recently is the Cullen Commission report. And we have our co-founder from the AML shop is Matt McGuire, is on the line as well. And what we thought it would be fairly important to share with the committee is to talk through the Cullen Commission report that came out of an inquiry in BC. And this is actually going to influence in many ways both provincial and federal changes in laws and legislation. The Department of Finance in its last budget had talked about a number of different changes to the Proceeds of Crime, Money Laundering and Terrorist Financing Act. And one key element of that we understand informally in timing is that they do intend to extend the application of AML laws and regulations to private lenders in the real estate space and potentially into other areas as well, as you'll see from the Cullen Commission report. Matt, I'll let him introduce himself, but he actually did present. He is on the witness list with the Cullen Commission, and he's one of the foremost experts of money laundering, anti-money laundering in Canada. I'll hand it over to you, Matt, and we'll go from there.
Thank you so much, Gene. Really appreciate the opportunity to present today. Let's begin by saying what Gene really said in a way, which is that that we've been expecting the finance sector to be regulated under the PCML TFA since roughly 2008. The Department of Finance then promised, signaled, and stated that they were going to include it. The reason they want to include it, apart from the negative press that this report came out and talked about, was that it's required by the international community. So there's an international set of standards that says that finance companies should be regulated as part of a country's anti-money laundering regime on a risk-based approach. And so that's a lot of the reason for the origin of this. And at the same time, we've been seeing lots of cases in the press about especially criminal elements using lending companies that were designed for the purpose of extortion, for collecting illegal gambling debts, being exploited for money laundering purposes. And that kind of the backdrop of where this is coming from. The Cullen Commission really had its, that we're speaking about, is really a BC-based initiative. And it had its origin in the idea that lots of transnational organized crime groups were laundering their money through lower mainland casinos. One of the investigations that I was part of, it was clear that one particular kingpin was laundering over $500 million through lower mainland casinos. And so this report attracted a whole bunch of attention because of the extent of and the potential that it extended further. Can we go to the next slide, please, Gene? And so, the government decided in 2019 to have a larger study that went beyond just, is this happening through casinos, and said, you know what, not only is this happening through casinos, but it's quite evidently happening through real estate and luxury vehicle sales and horse racing, and so, this was really the precursor to say, well, what's going on in BC in a deeper sense? And it went so far that David Eby, the Attorney General there, said, you know what, we need a commission. We need to look into this and actually study it in a detailed way. Next slide, please. And he's saying, listen, this is, in addition to financial institutions, it's almost impossible to launder money without the help of intermediaries and accountants and formation agents and facilitators, right? And so he started to say, not only is this happening, but it's happening with the help of the professional community. Next slide, please. And so one of the final precursors was to say, hey, listen, they looked to academics and said, well, how much impact is this having? If transnational organized crime is really having an impact, how much impact is it having, especially on real estate? And the conclusion by these professors was that real estate house prices were anywhere from 3 to 8% higher, 3 to 8% higher than they would have been had it not been for the money laundered in that sector. And it falls on the heels of other studies that talk about, estimated that, for instance, in the GTA, $21 billion was laundered through real estate over a 10-year period. So what were the terms of reference in this commission? Well, part of it was, listen, those providing banking and banking-like services, so financing being one of those, we think is one of the sectors. Let's look at the extent, growth, and methods of money laundering in those sectors. And then later, are the regulations keeping up? Are we actually enforcing? So this involved, the Cullen Commission involved 5 community meetings, 143 hearing sessions, 138 hearing days, 1,100 exhibits, looking deeply at the issue of money laundering in BC. And, it covered the national story a little bit more than that also. One of the biggest areas of worry for him were the corporate and other legal arrangements. So really hiding behind corporations. And so that was a big focus of the study. And it really went on to say, well, how much is happening, right? And so the studies show between 40 and $130 billion is laundered through the country every year. In the end, he kind of threw up his hands and said, you know what? Money laundering is meant to happen in the shadows anyhow. It's clandestine by its nature. So we can't really know how much there is, but it is a big problem. We can tell because of the prosecutions we've seen. We can tell because of what foreign countries are telling us. We can tell because of the impact we're seeing it having socially. Next slide, please. And so he said, listen, I note that this study is associated with measuring the size and impact of money laundering. There's an importance in recognizing that it may be necessary to take action against the threat of money laundering, even though it can't be empirically measured, right? And the problem in most of this commission was that since we have such ineffective law enforcement against money laundering, there aren't much statistics to say, well, how is it happening? Where are the particulars? Which sectors are most impacted? Because we can't see it. Right? It hasn't been exposed. It's like, we all know that there's lots of speeding on the 401. If there were no enforcement, how would we know how much there was? So he's saying, listen, his criticisms were generally in Canada, there's a lack of a vision. And his first recommendation was he wants somebody to be in charge of anti-money laundering in the province of BC and to oversee it. So this is the first regulatory implication that I would bring up to you, is that it's a second layer of regulation across the province, across the provinces. We see this in Quebec now, but we're starting to see it in Ontario and BC. And so this would be my worry, is not only would the sector be covered at the federal level by anti-money laundering legislation, but also provincially based on the structure that Cullen is proposing. Next slide, please. And so, he's saying, well, what do we want to do here? And this is where it gets really relevant to you, right? Is that he wants greater players over greater oversight over players in the real estate ecosystem, a focus on data sharing, that licensees in the real estate sector have to do source of funds inquiry. So no longer is it enough to say, I did the deal, I conducted ID, but it's about where's the money coming from for this deal? And so lots of focus was placed here on mortgage brokers and private mortgage lenders. So he believes they should be reporting entities. They believe that they should have prudential requirements and extended fitness requirements, annual information returns, education, dissuasive penalties, and disgorgement, which was extraordinary to me to read, that in the absence of following the sorts of rules and the program that he's setting out in his recommendations, that there should be good disgorgement of the fees and perhaps the interest involved. That the source of funds should be checked from investors, particularly when we're thinking about mortgage investment corporations, where he was, focused on the apparent disparity in the anti-money laundering legislation that says that makes it unclear who you're meant to keep track of. If you're a mortgage investment corporation, do you have anti-money laundering responsibilities to investors and the borrowers, or just to the investors? And what is the extent of that responsibility? And then that's fine. And then next slide, please. And then the one that was astounding to most of us was the idea that in lending transaction, that every recovery of a debt must have a mandatory source of funds declaration. and that the court's discretion is to refuse such an order if it's not satisfied that the declaration is truthful and accurate funds advanced by the lender were derived from criminal activity. And I can tell you that some of the reasons for this is that there's now an abundance of cases where banks, lenders, and others are using the courts to clean dirty money. There is absolutely no question in my mind. I've seen the cases as expert to a number of money laundering cases where a lender of ill repute for illegal gaming, for instance, will put liens against a person's house, will create debts on paper to be able to enforce their criminal funds, and even financial institutions that will invite a criminal client to have money paid into a court to be able to clean that money and have the court be the one to decide. But these are dealt with in a perfunctory way, and nobody's really asking questions about what is the source of the funds. And so, this is, as I say, the second layer of regulations being proposed is a provincial level of regulation where the BC Financial Services folks would have a clear anti-money laundering mandate and resources for their own anti-money laundering group, which would be duplicative to FINTRAC and other regulators in the financial sector. And they would have to develop guidance specifically for credit unions. They're talking about safe harbor provisions to allow financial institutions to share information among themselves about potential money laundering activity. I have big mixed feelings about that from a policy perspective, because on one hand, financial institutions are not law enforcement, and the decisions that they make about access to financial services, based on hunches, right? Because we're talking about suspicions, not knowledge, not of offenses, can have a cascading offense and can result in essentially exclusion from the financial system based on these hunches which are passed from person to person. The other change that is critical is the idea of a keep open regime. So it has been, since the regime came into place around the 90s, there's been this tension where, financial institutions are like, geez, it looks like a money launderer. I'm going to shut down the account. I don't want anything to do with the money launderer. Law enforcement will come along and say, hey, don't close the account. We need to know where this guy is and to be able to follow the money. If you close his account, he'll go somewhere else. Who knows where he's going to go, and how do we follow the money from there? And so he's suggesting in his recommendation that there be a regime where law enforcement can formally say, hey, listen, we require you to keep this open so we can continue to track things. So these are, when we're looking at private lending as a whole, these are all the recommendations we think are really relevant to you. There were 101 recommendations altogether. And so a good portion of them dealing with private lending. So saying, recommend that province enact legislation directed at private mortgage lenders requiring their registration, oversight, and enforcement. Recommend the province ensure that the regulation of private mortgage lenders has access to land title data. So it's putting really on the hook each of these private lenders, not only to be reporting entities, but to also have access to data that would help them conduct more thorough inquiries into the information related to their borrowers and potential borrowers. Mandatory source of funds declarations, really for every claim and recovery of debt, which we discussed. And then the ability for a court to refuse an order, depending on whether or not they can establish the source of funds. Next slide, please. And now we have luxury goods, which could be relevant for the purpose of lending and buying goods that are for which borrowings occur. And he recommends in 82 that there be a universal record keeping and recording requirement for cash transactions of $10,000 or more, with very few exceptions, private transactions being one of them. But this could have significant impact. If you, for instance, accepted a payment of $10,000 or more in satisfaction of a debt, there's a number of potential potential problems that arise from this. Recommendation 83, a mechanism by which the AML commissioner can implement time measures to add new and evolving risks to the luxury goods sector, so cover them more widely. regulate the purchase and sale of vehicles for the purpose of export, which was a source of money laundering that we know about, and then provide sales tax information about rebates from the Vehicle Sales Authority and the AML Commissioner. So that's has to do a little bit with sales tax fraud and carousel schemes and such. So it's also important to know that they're looking at that he's recommending that they integrate the efforts at the federal and provincial level for beneficial ownership registries to be available to lenders and other folks to be able to satisfy their regulatory obligations and inquiries. Next slide, please. Remarkably, in his study of lawyers and money laundering, he found that lawyers are subject to enough scrutiny and oversight. That's anybody involved in the field is surprised by this recommendation until they, of course, remember that the person at the helm of the inquiry is a lawyer himself. Next slide. And so the other things he recommended is of course the large cap transaction reporting I talked about, the vehicle import and export analysis, the regulatory oversight regime for virtual asset service providers. I heard you talk a moment ago about lending related to crypto, and so they're proposing another, again, a duplicative layer of regulation and probably a prudential regime over virtual asset service providers. How that's going to interact with the regime that's being rolled out for, which essentially calls crypto dealers securities dealers, we're not sure. And then focus on trade-based money laundering is kind of his last relevant point. So what does it mean? Sorry, the last slide I forgot about. He's talking about enforcement as one of the big solutions here, and I would agree with him heartily. And in fact, in speeches to this point, I've been arguing that this focus on more reporting entities and more sectors being covered is a little bit funny when he's pointing when he says that the information isn't really used effectively by the Financial Intelligence Unit. And second, the real problem here is that we're not enforcing. I mean, remember at some time in BC, there were no officers tasked with money laundering enforcement. That over a 10-year period, there were only 55 prosecutions of money laundering. That in our country, the probability of success of a prosecution of money laundering is less than 30%. That in almost no instances that somebody who's prosecuted has a forfeiture order or has any jail time at all, and at most somewhere leading up to 2 years. So he spent lots of time talking about civil asset forfeiture. That could significantly impact the assets that you might encumber, and especially that there is instead of a criminal test, there's a balance of probabilities test, and so this is something I'd be paying lots of attention to. The final one is an unexplained wealth order, which has become very popular to apply by law enforcement in the UK, where they reverse the burden, where essentially they say, law enforcement says, hey, look, you've got a lot of money. Tell me where it came from. And if for what you can't explain, we're going to seize it and apply to forfeit it. So you can imagine the impact that might have on cash flow based lending or secured lending. So these are all critical recommendations that should be considered by your sector. Being regulated as financial institutions under the AML legislation, really, it encompasses a few obligations to FINTRAC, right? One, it looks like everybody will subject to a registration regime. Second, it means you have to have a compliance program in place. So a documented program of a risk assessment, policies and procedures, training program, and biannual assessments. And then it's talking about the idea that you would have to ID everybody. You're doing that already. The subsequent obligation, of course, is to monitor, to look at what they're doing, to see what might be reportable, and then eventually to report. Should you observe something suspicious, or a transaction that meets a threshold in legislation, which is currently around $10,000. So there's that sort of series of obligations that would apply if a finance company were to be subject to the legislation.
So thank you again for the opportunity, Dean. I realize that we've reached upon our time. There's obviously a lot to cover. There is a lot of dynamics and a lot of changes coming that are facing the lending and finance sectors. We're here for you. We hope that we can come back to one of the other up and coming meetings to talk about some of the tools that are in the tool chest that are available for ID infrastructure and anti-fraud infrastructure that parallel on the proceeds of crime space in order to help empower you, and also to talk about more of the regulations that are expected in October, November, that'll at least hit on the real estate sector. But due to this report, we would not be surprised to see if it expands well beyond that.